Welcome to the Monetary Mysteries. Today, we're diving deep into the shadowy origins and hidden powers of the Federal Reserve, the central bank that quietly controls the American economy. You might think the Fed just sets interest rates, but its influence goes far beyond that, affecting everything from your job security to the price you pay at the supermarket. And yet most people don't even understand how or why it was created, or who really benefits from its existence. By the end of this video, you'll see the Federal Reserve in a whole new light, and maybe question everything you thought you knew about money in America. So what exactly is the Federal Reserve, or simply the Fed? It's America's central bank, created by Congress in 1913, designed to manage the country's monetary system. Its main roles include controlling the money supply, setting interest rates, and regulating banks to maintain financial stability. But here's where it gets tricky. The Fed isn't a normal government agency. It's a hybrid, part public, part private. The Board of Governors is a government entity, but the 12 regional Federal Reserve banks are owned by private commercial banks. This unusual structure gives the Fed extraordinary independence and power. It can make decisions without direct approval from Congress or the President. That independence is supposed to protect the economy from political pressure. But critics say it also shields powerful banking interests from accountability. Imagine an institution that controls the money you earn and spend, but operates mostly in the shadows. Before the Fed existed, America's financial system was chaotic. The 19th and early 20th centuries were marked by frequent bank panics and economic crises. People would rush to withdraw their money when a bank seemed unstable, causing even healthy banks to collapse. One of the worst was the Panic of 1907, which nearly destroyed the economy. Powerful bankers, including J.P. Morgan, stepped in to stabilize the system temporarily, but it became clear the U.S. needed a permanent solution to control these crises. Behind closed doors, elite bankers and politicians drafted the Federal Reserve Act. But it was passed quickly and quietly in 1913, with little public debate. Some historians argue this secrecy was intentional, to avoid public backlash against giving so much control over money to a small group of private bankers. The Fed was born in secrecy, and with it, a new era of financial control.
So how does the Fed actually steer the U.S. economy? It uses several powerful tools. Interest rates. The Fed's most famous tool is the federal funds rate, the interest rate at which banks lend to each other overnight. Changes here ripple through the economy, affecting your mortgage, credit cards, and business loans. Open market operations. The Fed buys and sells U.S. government bonds. Buying bonds injects money into the economy. Selling them pulls money out. This controls how much cash banks have to lend. Reserve requirements. The Fed sets rules on how much money banks must keep in reserve, limiting how much they can loan out. Quantitative easing. In extreme situations, like after the 2008 financial crisis or during the COVID-19 pandemic, the Fed creates money digitally to buy massive amounts of bonds, flooding the economy with cash to stimulate growth. Through these tools, the Fed influences inflation, unemployment, and overall economic growth. But because the Fed acts behind the scenes, many Americans don't realize how these decisions affect their daily lives. From rising rents to job market shifts, the Fed's power comes with huge controversies. During the 2008 financial crisis, the Fed stepped in with a $700 billion bailout, not for average citizens, but for big banks and financial institutions deemed too big to fail. Millions of Americans lost their homes and jobs, while Wall Street firms got billions to recover. This raised deep questions. Does the Fed protect the economy or the elite? Inflation is another concern. When the Fed prints too much money, it can devalue the dollar, meaning your savings buy less over time. Yet, inflation often disproportionately hurts middle and lower income families. Transparency is limited too. Though the Fed reports to Congress, much of its work is confidential, and its leadership is insulated from direct political control. Many ask, who watches the Fed, and who holds it accountable?
Here's the most astonishing fact. The Federal Reserve has the power to create money out of thin air. When it buys government debt or financial assets, it simply adds electronic credits to banks' accounts. No physical cash changes hands. This ability allows the Fed to inject enormous amounts of liquidity into the economy. But it also risks inflation and bubbles, where asset prices like stocks or real estate become artificially inflated. Many economists argue this power should be more tightly controlled or reformed. Debates about abolishing or significantly changing the Fed have raged for decades, but the institution remains a cornerstone of the U.S. financial system. Understanding this hidden control is crucial for anyone who wants to grasp how money really works in America.
The Federal Reserve is more than just a bank. It's a hidden engine driving America's economy, shaping your financial future in ways you may never see. If you found this deep dive eye-opening, please hit the like button, subscribe for more hidden truths about money, and share your thoughts in the comments below.